The markets remain range-bound through the week, not being able to close above 9,000 levels even once. And trade was choppy with mixed global and domestic cues. To tell us what to expect from the markets next week, we have with us Sandeep Wagle from Angel Broking and Jagannadham-Thunuguntla from SMC Capital. So start off by telling us, was the market expecting the GDP numbers to be as low as what was declared?
Definitely, we were expecting a slightly better numbers, especially after 10 days back. The Central Statistical Organization has given an ambitious number of 7.1% GDP for the whole year.
And what other economic cues should we be watching out for next week?
One is the inflation numbers are falling very fast, and we may be heading all the way to deflation. And at least in the distant memories, India doesn't have any memories of deflation. So it's a very billion-dollar question how a world, in specific India, can handle deflationary conditions. So that is one side. Another is the advanced tax numbers. Of course, they may not come in the next week, but they will come during March. So advanced tax numbers can give an indication of what kind of performance the Indian corporates have shown in the last quarter. And also March also signifies the tightening of the liquidity in terms of the payment of the advance tax. So that can also become an interesting input for the markets as a whole.
And how worried should we be about the falling rupee?
The message is clear in that also that FIIs are moving out, and it will also be interesting to see what kind of forex reserves that we will be having this quarter, this week, because whenever there is this all-time low hitting of rupee, it also accompanies with a big dampener or a big outflow of forex reserves.
So there's a lot of negative news from the international markets as well. What's your take on that?
Today, Japanese PPI production numbers are minus 10% on year-on-year basis. Similarly, US GDP numbers on an annualized basis were minus 7.6%. And also one scary thing that is developing is the American Express credit card defaults for this quarter were 11%. This is all-time high. Credit card market in US is twice the size of the subprime market. Subprime market there is about $1.6 trillion, whereas the credit card market is about $3.2 trillion.
And how do you see next week's trade?
It can move broader range, but the bias will be towards much lower levels than the current levels.
And thanks for watching.